we've seen in the last couple of years, the world is changing. Trends are changing. That's one of the great things about our portfolio, our philosophy, our strategy is we will change and adopt based on changing market conditions, and that's just something that we shifted into about a year ago and has done incredibly well for investors and helped bottom line results. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. We're back. It's Friday. We've had a mixed week in the markets, but it does look like things are still on the path and the road to recovery, which is good and nice to see. But how you doing over there, Greg? What's happening? What's going on today?
Yeah, no, it's good. It's been a decent week in the markets. The weather is getting better. The Raptors won first playoff game last night. So lots to celebrate here. So all good news.
Oh yeah. It's nice to have a little bit of warm weather. Things are warming up. The market's looking a little bit better. The environment's looking a little bit better. Today, what we want to do, we want to do something a little bit different, and we wanted to dive a bit deeper into one of our themes, one of our topics, one of our holdings. We've noticed, I'm sure a lot of investors have noticed, it's all over the news. If you look at semiconductors and chips and everything related to that sphere in the market, it's absolutely on fire right now, and we've seen incredible returns. Even this month, it's pretty mind-boggling. But next to oil, year to date, semiconductors, which are basically chips, are the thing that's really leading the market, pushing things up, is driving incredible returns. We have a pretty core holding in a semiconductor position, which we're going to talk about, but it's a pretty interesting topic about why this is going on. So we want to do a little bit deeper dive into this story, this position, talk about semiconductors, explain why this is going on, driving things, and what this has got to do with markets and your portfolio.
Yeah, we've owned this position for over a year. And to your point, Will, I think year to date, it's up 40% in the last even few weeks. It's gone on this parabolic run. But maybe just to kind of level set things, we hear a lot about it in the news, semiconductors, chips, microchips, like maybe just as a starting point, like just give us a sense on like what exactly those are and kind of their importance to the overall economy.
Well, they're the chips that process everything. So all of the compute power, everything that's going into every single device, every electronic, it's powering all of the AI. It's really the infrastructure of all of technology. And it's the whole picks and shovels of the whole technology and AI story is really semis. So they're physical things. They're these tiny chips that have incredible power that has become really the center stage of the market, of the economy, and they're a massive part of the overall market, economic, and even the geopolitical story that we're seeing playing out. So when we're talking semis, we're talking these the little chips when you open up your phone or computer or whatever it is, and they're really powering everything overall.
So what's the story if we're kind of look at it today, or really since COVID, because it was around that COVID period where chips, semis really started to see a surge. So what kind of happened then, and what are we seeing today with them?
Well, maybe even first, actually, Greg, like, why don't we go back even further, because it's a longer term story than just what's happening now. So it's probably the last. I mean, really, it's since going back in history. This goes back all the way to World War II. That chips and semiconductors and the microchip coming out of that became this big technological innovation that started to being developed. But probably really wasn't until the 70s that started to pick up. And then if you look maybe the last 25 years since the tech boom there, that's when the real story happened, where these chips have become the center of the whole technological economy, the center of innovation. They're rapidly expanding and growing. One of the things with them is the compute power and the speed. It's one of the things that's often cited as Moore's law. Is the speed is doubling every couple years, or the power of these chips is doubling every year. So it's this massive technological innovation that's been right at the center of the market and the economy, and it just keeps increasing with time. So think of going back, computers, software, cell phones, everything, AI, it's all based around this. And so it's a massive story. And what's been going on is countries, companies, everyone realize that this is a very valuable resource that needs to be managed, needs to be controlled. And so it's become a pretty complex story in terms of the politics and the geopolitics, because they're physical things. They're controlled in certain areas. They're only made in certain areas as well. And so that's part of what's created the demand, is this changing world order as well. Similar to other natural resources, is countries are going and businesses are trying to shore up on these things and everything that's involved in it, and it's causing just a surge in demand and a surge in price overall.
So it almost seems like semis are a little bit of a strategic resource, similar to how you might like oil or gold or something. And it seems like countries are kind of fighting over that resource right now, which is partly why it's doing so well.
Yeah, and everything that goes into making them. There's natural resources, like we've got our semiconductor ETF, but even rare earths and things like that go into semiconductors, all the magnets and everything that's involved. So it's beyond above my pay grade to explain how these things are, how they're made and what's involved in them. But there's a lot of very valuable resources that control these and how they're made. So I think the fact that there's a lot of nationalization going on, there's resources are being shored up, resources are being pulled in. At the same time, you've got this AI wave that is creating massive demand for chips and new compute power, and that's why when we look at SOX, our semi ETF, I think it's 50% year to date, 40% month to date. And then it's something like 150% over the last year, which we could pull some charts up, but it's a pretty good story from not only a technical relative strength investing, just an overall fundamental story about what's happening in that market as well.
And it's been a really strong story, even going back like 5-6 years, as I mentioned, like since COVID. Obviously, in 2022, the whole tech complex changed with interest rates and inflation, but it's really been on this tear, obviously more recently, but when we look back for the last like 3-5+ years.
Yeah, and I think going back to your earlier question, it kind of came into consciousness sort of around COVID, that there was a realization that, hey, you can have shortages of these things, and it came into the sort of the investment story in the landscape that there might be issues with the supply chain and some disruptions in delivering them and all these things, but they did pretty well. The whole complex did quite well coming out of COVID and for a couple of years, but it took a pretty big hit in 2022, as did all of technology. And that's one thing to realize. Although it's behaved that way, semis are pretty volatile, and I wouldn't call them a safe area of the market. So anything that's going to go up 40% in a month or 150% over a year, it's got the potential to whipsaw and produce a lot of volatility. So although it's a good core position, it's certainly not your whole portfolio or your whole strategy. It's a part of the tech makeup, but it's performing for one a heck of a lot better than, say, software stocks, which are getting disrupted and beat down by AI, whereas semiconductors are right there in the center of it and actually benefiting from it. But what you saw is 2022, they all went down, and then right at some point in 2022, the AI story, late 2022, early 2023, started to come out, and you saw this incredible run out of the NVIDIAs, et cetera, that pushed it up over a couple of years, probably until about summer of 2025, I think. So there was probably 2 or 3 years that there was incredible run, and then things pulled back. Summer of 2024, things pulled back going into 2025. Around April, you had the whole tariff situation, and that's when we entered our one of our favorite positions, which is SOX, so SOXX, which is the iShares Semiconductor ETF.
Yeah, so it almost seems like, well, like through this last period, there's been times where semiconductors or chips, like they've gone down, but it almost seems like that's another opportunity for a springboard and a leg up. So I guess a question as it relates to like our clients, our portfolio, our process, like how have we been playing that theme? Is it just the ETF? Is it individual names? Bit of both?
Well, I mean, the ETF has outperformed a lot of the heavyweight individual names, and so we've had the ETF SOX, and that's been a good, especially over the last year. I mean, and Nvidia had an incredible run in that first phase, but I think it becomes a celebrity stock at a certain point, and valuations get stretched. But when you look at the ETF, there's 30 or 40 companies that make that up. And it's not just the big major players. You go right through the whole value chain. And what you're starting to see is a lot of the companies that are in that space that were maybe ignored by the market and are ignored by investors are starting to catch a bid. I mean, it's kind of exciting now. Like Intel is up big today, and that's one that had kind of been left in the dust as example. So when you own a SOX, you're not just going to get those big, major players. You get right across the value chain from everything that's feeding through it in terms of designing the chips through to manufacturing, all the parts, the technology that goes into it, and all the companies that are involved in it. So you're starting to see that spread out a bit. I mean, I do think when you're seeing something, we've seen this with other assets, whether it's your gold or other oil or other places in the market, it's running really hot right now. And we look at it from a technical perspective, obviously really good to see. Probably pretty overbought, overextended. Does that mean it's going to crash tomorrow? No, but it means it means there's some risk of that some steam can come out of that trade. That being said, what's nice about the ETF is you're seeing that broadening out. That's leading to that upward movement, and it's helping drive returns forward here.
And the nice thing with the ETF, Will, so as an example, like on the year, Nvidia, last I checked, was up mid single digits on the year, but this ETF is up a lot more than that. So you don't just get the big players, you get kind of the small players, and you get the medium players as well. So some of the big heavyweights, not to say that the steams come out, so to speak, but they're just not seeing those types of returns that they were maybe seeing a few years ago.
Yeah, and I think the reason is it just valuations get stretched, the return gets stretched, and then investors want to play that theme or that story, but they want to look for other areas and other pockets to go to. So you can go, whether it's smaller mid cap names or just other parts and pockets of the value chain that they can go and invest in. It winds up making a lot of sense, but the ETF gets the benefit that we don't have to go and pick one single winner or try to pick, okay, what's the best name in the semiconductor space. When you kind of open up the hood and look at them, probably a lot of names are not ones that individual investors would recognize or know particularly well. But the good thing is that you get the benefit of that diversification and that upside and that swing up overall in them, which is what we're looking for.
Yeah, there's some smaller names like Marvell, Teradyne, which are seeing huge runs this year that we probably wouldn't go out and buy the individual stock per se, but it's in the ETF stocks. So we're kind of rising tide lifts all boats. We're kind of getting the benefit of that as well.
So it's just to show you little bit on performance here, what this ETF has done, just to cite some of those numbers. And I mean, look, it is a more volatile position. It is a growth oriented position, but it's right at the center as a strategic resource in the world, in the economy. Everything that goes through the whole picture here is highly coveted, not only by businesses, but by governments and institutional investors. So that's the reason you're seeing numbers and returns like this. But I mean, I don't think this is even with today's returns, but that's up to yesterday. So 46%, 156%, which is closer to our entry point. If you also look at this is to point out, say over 5 years, those COVID years, there was good lift. but these can be volatile positions where you had a pretty significant drawdown. That was that whole next leg up with Nvidia, but then these stocks stalled out up until really March or April of 2025, and then that's the lift that we've seen, and then you're seeing that go parabolic. So the thing to be concerned about is exactly that. When names have run up that much, I mean, we own a healthy position. Are we going to want to chase more of this here? Probably not, but it's also nice to own it when it's doing that. But remember that these things from just a technical perspective will get overbought, overextended, and will pull back when they run too far, too fast. That being said, we obviously really like the story, really like the theme longer term, and it's just here to do a bit of a deeper dive to explain what's going on with this story overall.
Yeah, so just a question. Well, so this is a 4-year chart, I believe, 4-year chart somewhere in there. So you see some drawdowns, but like you just look at the longer term growth and it's been exceptional. Do you see this story as in the very early innings, or do you see it as a little bit more kind of mature at this point, or is it too early to tell yet?
It's going to ebb and flow. I don't know if it's early when you're seeing numbers like that, but it's something that's been developing for a long time. But I do think the way that these are trading, there's a secular tailwind behind it. There's a massive demand for it. There's shortage of supply. There's a lot of forces that are leading to higher prices. It's not dissimilar from, we told the story probably last summer on uranium. It's not dissimilar from that either. Uranium's a power source. There's a huge demand and need. There's not a lot of supply, and that's what's going on with these chips. The thing I would say, though, there's also major risks here to disruption. If there are shortages on natural resources to make these things, that's a big issue. The other thing is these are all, they're actually made, most of them are made in Taiwan. So if you start to get geopolitical chaos or uncertainty over there and things start getting shut down, there could be major disruption. So I think the thing to understand is, yes, there's big, longer-term secular tailwinds, and supply-demand is in favor here. But there's plenty of things that could disrupt this. And if you start hearing there's naval blockades in Taiwan or something like that, which is not something that is unheard of in the media, that's going to be a real problem for semis. And the other thing is, basically, these are being stockpiled at this point. Companies, businesses are buying into it like crazy. And so if there's any weakening that happens in demand at all, that could create issues. There's a lot of things with this market. When you see it going up that much, it's eye-boggling, but it doesn't mean that it can't lose steam and come down. At the same time, we really like the story longer term. Just understand that we're probably going to see some ebbs and flows, to say the least, in this market.
Yeah, it's had a huge run. Wouldn't be surprised if we see a little bit of a pullback at some point, but to your point, the longer term narrative is still quite strong on it. So I guess just big picture, Will, like as it relates to chips and just the portfolio and everything going on, like what would your message be to investors right now?
Yeah, this is just to give you an idea, kind of open the hood into one of our positions, one of our holdings, and it's part of the process. And I think that we've seen in the last couple of years, the world is changing, trends are changing. That's one of the great things about our portfolio, our philosophy, our strategy, is we will change and adopt based on changing market conditions. And that's just something that we shifted into about a year ago and has done incredibly well for investors and helped bottom line results. So there's lots of changes and shifts that are happening in the world, and politics and geopolitics and everything that's happening there. But we look to be in positions, one, to manage the risk, but two, to make sure we're adjusting and adapting to take advantage of opportunities. So this is one more on the opportunity side that we've looked to capitalize, and it's worked out well for sure at this point. It's nice to see nice to see the growth that we've had there.
Yeah, and it's part of the reason why it's been a volatile year, but clients are looking at the portfolios. The numbers are quite healthy, especially given everything going on. So, to your point, Will, this is just kind of one piece of the broader portfolio that's been working for us this year.
Yeah, when we see things up 150% and 50% year to date and 40% month to date, it's easy to be wealthy, feel wealthy, and realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. We're working hard for you over here. If you need anything from us, any questions, you want to talk about this or anything otherwise, just let us know, and we'll be back with everybody next week. Thanks.